I was actually quite reluctant to make a video today because the craziness was so crazy and the insanity was so insane. And sometimes I think absence sends a stronger message and gets a message across better than talking. But nonetheless, when things aren't going our way, it says something when somebody's gonna come out and speak and address it and continue to make their case or make their pivot. And maybe today we'll talk about the things that would cause me to pivot, but we're not there yet. So I want to get into some things that I view as fundamental to this market. And, I think Tesla up, 70% in less than a month, Lucid up 90% in a day. These things are not real. This is fake behavior. And it's happened before and it's gotten crushed. It's gotten crushed every time. It might make sense when the Fed is printing unlimited money and interest rates are zero. But neither of those are the case. The Fed is taking money out. They're increasing interest rates. They've increased the long-term expected interest rate. And, it's just not the environment for that. The soil cannot deliver those fruits in a sustainable way. Can it happen for one day? Can it happen for 2 days? Can it happen for a week? Maybe. But we are not, unfortunately, as great as it would be to be in that Q1, Q2, 2020 environment where I returned several 100%. We're just not in that environment. We have a different soil and we have to react to that. So I've got some notes today. Hopefully I'll cover a bunch of important things. If you have any questions, please leave them in the comments. I will address them in the comments. And if you ask a very good question, I will address it in the next video. So we've been here before. We've seen this many times. We've seen even more extreme bear market rallies than this. The market will rally into Fed meetings, and then the Fed will deliver the harsh realities and the harsh truths that we'll get into in a second, and the market ends up pulling back and not continuing to rally. So right now, we're in the blackout period. The Fed isn't here to talk and kind of dampen things down. There's plenty of people who are short. It's been an aggressive rally. There's plenty of pain. There's some positive economic data, so it's very easy for people to cover shorts and get out and be fearful. Just like people will capitulate on the downside, people will also capitulate when they're short on the upside. And that is happening today. We've seen how crazy and extreme that can get. And, we're trying to balance those two forces. So we are experiencing pain today, but we do a good job of balancing things here. We anticipate situations like this. We are hardened, we are experienced, we've been here before. This is nothing we haven't seen. We've seen it many times throughout the past several years in various trades and energy trades, which we've obviously seen how that's gone, various other market rallies where we were short, we've seen how that's gone, et cetera, et cetera, et cetera. So you have to remember this is nothing unusual. We've seen it. If anything, this is the most extreme case. And in bear markets, the rallies are the strongest. The bear market rallies are the strongest. Earnings, in my opinion, I get it. I've heard some people try to say earnings are good. In my opinion, earnings are not good. At least they're not good compared to the market we've had for like the last 10 years. Where, as far as I'm concerned, this is a paradigm we haven't seen in terms of earnings since the Great Recession. And I get it. We're not in a hardcore recession yet. There's people still unemployed, but the numbers are not typical economic expansion numbers that we've experienced for the last decade. We've seen Microsoft grow at 20% like clockwork. They're not doing that. They're growing at 2%, which is essentially the rate of inflation. And then they are bringing down forward guidance. And they're seeing various areas of their business, devices, which is very correlated to Apple, I assume, down 39%. You see Intel getting clobbered. Again, very similar to Apple's business, clobbered. So, when Apple's the biggest weight in the market, it reports next week after the Fed. I think that's perfect timing. You get a hawkish Fed. If you're them, you want to look for something else. You don't want people thinking the business is bad and the products are bad. Blame it on the Fed, have the Fed come, take the market down, report, and just get washed up in all that noise. So, Microsoft is not growing at 20%. 20% growth was higher than average S&P earnings growth before. So therefore, Microsoft could command a significantly higher premium to the rest of the S&P in terms of price to earnings. However, their earnings are not growing at 20% anymore. They're growing much more on par with the S&P 500, and therefore the the premium is highly questionable, highly suspect at this time. They're seeing cloud, their main growth driver, slow. I think there's a pullback in mega cap tech, and I think that's one of the pieces. Next, February inflation forecasts, or actually rather February inflation data that is based on January's inflation, is not declining. We've been talking about inflation declining. The market is currently expecting inflation to drop like a stone. The Fed is saying that inflation is not going to drop like a stone. It's going to be a longer slog, is how Waller put it, longer slog. And right now, the January inflation data expectations are indicating that it is going to be a longer slog. Month on month is flat for CPI. Year on year is flat for CPI as well. So that's not falling, that's flat, that's continuing to just be higher than acceptable inflation for the month of January that we get on February 14th. I haven't seen the core expected numbers as of yet. Those obviously still have more room to go, and the January numbers can change in either direction until we get closer to that data. And obviously what matters is the true data, not the expectations. But it indicates that this, 3-month fall in inflation that we've seen that the market has taken and ran with is potentially not the case, not the truth, not the thing to worry about. And there's a reason the Fed is being so hawkish and are talking so hawkish. So we have to not fight the Fed, in my opinion. You can do you can bet against them. You can bet that inflation is going to continue to fall at a tremendous rate. And that's on you. That's your bet. I'm just sharing with you what my bet is. I'm not fighting the Fed. I believe inflation is going to be sticky. I see that gas prices are up over 10% for this month, and I'm a little more hesitant. There's plenty of insanity in this market, Lucid, etc. We've seen what's happened with Bed Bath & Beyond. That stock was up like over 100% a week or two ago. Now here it is going bankrupt. So Lucid is right now like $15 to $18 billion. That's a tremendous valuation. Tremendous. That's a tremendous valuation for a company that has a reasonable probability of going bankrupt, especially if interest rates are going up. It's getting more expensive to buy a car, and we all know how auto sales do in a recession if we get one. GM went bankrupt in the last recession. So it happens. Finally, the market is continuing to rally, but we're getting hot jobs data. I mentioned the Waller speech. He talks about jobs data, needing to see jobs, cool off, slow down, etc. We're not getting that in the data. Obviously, we've got some stuff next week, but it's not looking like the Fed's getting what it wants there. So I expect this meeting to be hawkish. I expect them to address that, the possibility that inflation in January was sticky and did not continue the trend of falling, and the market to ultimately pull back from this reasonably elevated level where companies like Microsoft that are not growing at 20% still command a very high premium that needs to reset. And maybe the overall market multiple needs to reset as well. So that's my thinking on this Friday, on this crazy bananas day. It's crazy for all of us. Nobody's sitting 100% pretty today. Obviously some people are, and they're probably hooked up on adrenaline, but you really just got to be calm and just focus on the fundamentals and just be patient. We've been here before. We've experienced worse pain than this. This is nothing, honestly. It's nothing. So we'll see what happens. Excuse me, I got a little bit of a sore throat. That's today's video. Until next time, peace out.